John Jenkinson with you, and this time around we're going to check in with Brian Hoops with Midwest Market Solutions based in Springfield. There is where Brian's at anyway. First of all, the corn market. And right now we've got the corn just kind of hanging on here to a half to one to, in some cases, 1 3/4 cent gains, with December up 1 1/2. The March is up 1 1/4 at 383 1/4. The May is up 1 1/2. You know, Brian, there before we went on the air, you were talking about just how quiet some of the things are over here in this market. I was doing a little bit of research here this morning before we went on the air and see where Brazil has done a really good job at cleaning out their inventory and selling a lot of corn. At some point, they have got to be running short of corn and soybeans. You would think that we'd really start to see these corn sales start to pick up, especially at these levels.
Well, yeah, you're exactly right. This is the time of year where they do start getting short on supply. They're in their planning window. They usually don't store a lot of their crop from last year. They end up making that sale, so there isn't that much inventory for foreign countries to rely upon. They have some sales that they have been making, but this is the time of year where our exports for corn and for soybeans should be really ramping up. And yesterday's inspections number was the lowest for corn in the last 4 weeks. It was a marking year low for wheat, and the soybean number was really good. So you've got the situation where we're selling a lot of soybeans right now, but that usually shuts down as we go into February, March timeframe. So this is our best window of opportunity to make some sales to other countries. And the caveat to that is if things would turn dry in Argentina, Brazil, they're going to be sold out of their crop. They won't have a new crop because of some drought that hurts their crops that are being grown. Then that would lead to better U.S. export business, similar to what we saw in 2018.
Well, and soybeans are a half a penny higher on this front month of January, and then you go out here to some of these deferred contracts in the soybean market, and we're running anywhere from a half to 3/4 of a penny higher. March is up a half, May is up 3/4, so a little bit of strength over there in that soybean pit as we were talking about there. But the wheat, this is it's kind of different here today with March Chicago wheat down 5 1/2, July down 4 1/2 cents. So weakness over here in the Chicago wheat market. The Kansas City wheat market, we were quite a bit higher than what we are right now. We're only about a half to 1 1/4 cents higher, but it looks like Kansas City is trying to work on that spread again between KC and Chicago.
Yeah, the morning started off with higher Chicago prices as Egypt had tendered for some optional origin wheat, and our wheat prices try and rally and thinking maybe we'll get some of that export business and it'll be bullish for our prices. But in reality, we were not even one of the countries that offered any wheat in the Egyptian tender. They ended up buying 295,000 metric tons from Russia, and it looks like Russia is going to have a much larger crop this year than what they did last year. So they're going to be the leader in the export market, and U.S. prices are just going to have to, be a follower or kind of suffer. And so you're right that Kansas City is narrowing that spread between Chicago and Kansas City in a pretty big way. Minneapolis is doing the same thing. A lot of intermarket spreading going on in the wheat futures as, the Chicago market pulls back, realizing that we're not competitive on a worldwide basis.
Brian, real quickly then, before we go to a break, why aren't we being more aggressive or more effective maybe in some of our worldwide sales?
Well, part of it is our U.S. dollar has been really strong all this entire year, and when we have a higher dollar, and that's thanks in part to our very strong economy. If we're going to have the world's strongest economy, foreign countries are going to want to invest their dollars in our U.S. dollars, and that keeps our dollar well supported. But in turn, that makes it more expensive to other countries to buy our products and our services. So that's why we're seeing a real slowdown overall, especially in corn and in wheat.
All right, Brian, we'll be back in just a moment. Don't go anywhere. Stay with us. We'll continue this conversation right after this. Starting in the fat cattle market here today, we started out with a weaker tone at the opening bell. December down 8, 120.67. And by the way, that's a pretty narrow range of trade. 120.28 to 120.95. No word yet on any askings or bids for cash cattle. Let's move on to February. More activity here in this February contract. It's down 30 at 125.50. April is down a little over a dime, just a shade over 126. Now, in the feeder cattle market, we got a whole different story going on here. January up 67, 142.82. March up 32 at 143.35. And the April's up 45. And in the hog complex today, while we're talking about the proteins, we're all higher here by at least $1. February up $1.88, April up $1.52, and the May up $1.17. That February contract trading at 68.03. So, Brian, what do you think it's going to take to get these fat cattle to kind of follow suit of what's going on in the feeders and the hogs?
Yeah, I'm a little surprised they haven't already, and maybe they will by midday. I don't know if they're waiting to see cutout values or exactly what they're looking at, but to show this numbers being down this week, I think there's certainly a step in the right direction. I thought that they may have carried some of those cattle over from last week, and that was not the case. And that should be a little friendly surprise for this week's cash markets and for the future. So we're absorbing a little bit of selling pressure, and I think that's due to some seasonality that we usually trade lower at this time. But we're trading in inside days right now compared to yesterday's trading range. That range holds. I wouldn't be surprised to see some short covering going into the end of this trading session.
Do you think possibly it could also have something to do with there really isn't any really big weather threats right now in the cattle feeding regions?
Yeah, and that's certainly a good point that you don't have any weather problems. You have a sharply lower stock market, and there's a lot of fear that this is kind of the start of a tipping point in the stock market where the economy could start slowing a little bit here as we don't have a relationship with China. So there's a lot of concerns about that, and I think that's keeping some of that buying interest away from that cattle market.
All right, anything else you're going to be watching for in this protein complex this afternoon?
Well, yeah, this cutout values at midday and this afternoon certainly close. Keep a close eye on them. Weights have been trending up in both the hogs and the cattle, and that's something that traders watching very closely. You have increased weights each week. That adds to the supply, and we already have plenty of hog supply, especially.
Oh, that's a good point as well. All right, Brian, thank you very much. Brian Hoops is with Midwest Market Solutions. He's based in Springfield, Missouri. And he had the latest insight on what's going on in the protein complex.
Yeah, turnaround from yesterday.
Financials, yes.
Yeah, looking at that livestock market.
Yeah.
Keep close tabs on that today. Thank you. Appreciate that, John.